In this presentation, I am going to describe the trend report for the coming week. So like earlier weeks, every week on Friday, post market hour, we used to release the trend report for the coming week using the one standard deviation formula. And if you are a regular visitor of our site, you can download that from the download link here. So you will get the PDF download of that particular report. So what we have suggested last week and how it has performed, that also I will tell you in short. And also I will take you across for the coming week's trend expectation. So this is the last weeks for the February series, 4 days, last 4 days activities, price points are here. So these calculations we have done on 16th Feb and uploaded in our site and informed to you. So volatility was pretty big that time, and it was giving a trend breakout 10,482 level above uptrend and 10,402 below downtrend. In fact, on the Monday on the 19th Feb when it has opened 10,470 it has opened 485 in very short time of 1 or 2 minutes it has back. However, after that it has fallen down. That's why I used to say that once the market opens, just give some 10 to 15 minute time for the market to settle down, then only you can make an entry. Even though if you are not getting a chance to enter at 0.236 level, you can get a chance at 0.382 level. So nothing wrong if you can wait for 10 to 15 minutes. So that in high volatility situation, this kind of false trend breakout also happens. So 11% of volatility was there. So same thing we have experienced. It has opened in couple of seconds, it has jumped up and then it has surrendered. So we got a chance as per the downtrend. We got a chance to sell at 10,402. And if you just look the price points, this is very important, very important here. Monday's price point was 10,290, 10,290, the low of the Nifty future. So this was the calculations 0.888. The third target we have calculated as 10,291. So 1 point above we have calculated, and day's low was 10,290.10, if you can say that. If you compare with our calculation, it was just a 60 to 70 paisa difference. Then all the days of low, if you can look into 10,332, 10,341, 10,330, if you just take all these prices into account, all lows of this expiry week, if you compare with the report, you are getting it 0.618 to 0.86 level. So this level you are throughout the week you have made the things, and at no point of time your stop loss has triggered. So this was the good week wherein you got a great success, 110 points around in the future you have got. And if you have hedged with the option, you could have sacrificed something in the option hedging component. All in all, it was a successful week. Now moving to the Bank Nifty part, if I just go for the Bank Nifty historic data and 19th to 22nd, if I can just focus on this one, 25,300 opening and our 25,331 above. If it is going to 25,412, I always say that Bank Nifty, you wait for 0.382 crossover because the base value is very big, 25,000 for that only. So if it crosses, you can buy. So this price has never come in the Bank Nifty. If you just look into the higher part or the opening part of the 19th February to 22nd February. However, if you look into the low, 24,752 was the low for this particular week. 752, 24,752 was the low for the particular week. So if you compare with this thing, you have successfully given the downtrend at 24,987 and achieved till this target. So both the reports suggests, both the reports, both the Nifty and Bank Nifty price actions starting from 19th to 22nd February. When I compare it with the calculation, it suggests that it is a successful week, and out of that, you can say out of 120 weeks, 109 weeks it has completed. Now coming to the next week's trend, which is valid from 26th Feb to 2nd March. Volatility fallen greatly. Last week it was 11% in Nifty future. This week it is coming to 8.37%. And 10,507 was the closing at the last traded price, and it is the 121st week of the trend analysis using one standard deviation, wherein we are taking this last traded price, real-time volatility, number of days 7 days we are taking, square root of 365. By this process we are deriving this price range. So this suggests that if the Nifty crosses 10,536, you should buy Nifty along with the 10,500 put option, which is currently at 155-156 rupees range. However, you can purchase once this uptrend will be given, it will be trading at 137 to 141 range. You can buy the put option. Along with the future buy, you should buy the put option. And if the future give a stop loss of 10,460, at that point of time, 76 points you will be losing on the future trade if the stop loss hits, and 34 to 35 points you will be recovering from these options. So the point of hedging these things with the option is that whenever we are losing some money, or if the trade is going to be a stop loss hit trade, then at least over 50 to 60% of this stop loss amount we can recover from the hedging component. So that is the very idea of hedging the things. And similar way, whenever the trade achieves certain success, 30 to 40% or 50% of the profit also we have to sacrifice in the hedging component. So it is better to hedge. So here 10,536 uptrend, and if you are buying it, buy the put option with the range of 137 to 141, 10,500 put option. If stop loss hits, come out from both the trades and initiate the selling side. If stop loss doesn't hit, the first target will be 10,582. Trail your stop loss to the 10,554. For initial entry, 10,460 is your stop loss. Once first target hit, trail your stop loss to 10,554. Once the second target hit, trail your stop loss to the 0.5 retracement level, which is 10,568. So here, one second target, trail your stop loss to the 10,568. Once you are achieving the third target, trail your stop loss to the second target. So this is how you can go on trailing the stop loss as long as you have not achieved the optimum target or the stop loss, trailing stop loss is not hit. But at one point of time, if you think that yes, after second or third target, if my profits are good, then better to come out from the trade with the profit. Similar way, if Nifty on Monday goes below 10,478, you must sell the Nifty along with a 10,500 call option. Once again, I will repeat, these levels are weekly trend reports. This cannot be used for intraday purpose. These levels, whatever we have calculated using this particular method, it is for weekly purpose. It is not valid for intraday trades. So if you are selling at 10,478, must hedge the 10,500 call option. Currently it is at 160 level. At that particular time, 140 to 151 range you can get. And for the stop loss for this selling trade will be 10,554. If the stop loss hits, then the call option which you have bought will be trading at 198 range. First target for your selling trade will be 10,432. Second will be 411. Third will be 399. So this is the 399. So this is how you can, same process you can follow the stop loss, trailing stop loss. First target achieved, trail your stop loss to 10,460. Second target achieved, trail your stop loss to the 0.5 level, which is 10,446. Third target achieved, trail your stop loss to the second target. And once you are closing the trade, you should close the hedging component also. Hedging we are taking in case the trade become a failed trade or the stop loss happens, then a part of stop loss we can able to recover. Part of stop loss we can able to recover. Many times people used to ask that yes, this is a stop loss will be some 70 to 75 points. The stop loss is there, but the first target, you can say that first target is coming to some 40 points. So why the stop loss is so big? So the very definition of stop loss says when the trend changes, that price point we need to take is as a stop loss. The trend change points, the price point where the trend will change. Every method, all technical studies says that the price point in which the trend changes is known as stop loss. Nowhere it is written in the technical studies. Stop loss you should put 10 point below, 20 point below or 5 point below. The definition of stop loss itself we are liquidating. That's why we are landing in losses. The stop loss, you should not put a stop loss in such a way that it should trigger. If the stop loss triggers, it may make you happy that yes, I have put a stop loss, it has triggered. Beyond that also another 20-30 point it has gone and come up, but that is wrong. Trend change did not happen. Some amount of fluctuations happen in the market and we just put some stop loss without following any method. So by this process, if we trade, our trade will not be a healthy trade and long run we may not exist in the market as a trader. So here we are getting some 75 points of stop loss. So how we can manage this stop loss? That is very important. So if you are hedging it with a call option, out of this, if the stop loss hits, so out of this 75 points, 40 points we are just recovering from that. So net we are just taking 35 points. So 150%, more than 50% of the stop loss we have recovered from the hedging component. However, if we are just going for a first target or second target, some amount of our profit will be lost in this hedging component. If you are winning 40 points in the first target, maybe some 20 points will be losing in the options, but it is worth to lose because you win and a part of the things you have lost. However, if you just hold it for the second or third target, you get a good success and the losses whatever happened in the hedging component, offsetting that also you can make some good gains. So here the idea is in case your trade is a failed trade, you recover 50% of your losses. If the trade is successful, you can make some decent gains. So by this process, you manage your portfolio in such a way that no point of time it should give you a negative return. So for that reason only hedging is very, very important. Same way you can follow for the Bank Nifty. However, the Bank Nifty only small deviation is there. Make the entry at 0.382 level. 0.382 level, which is 25,546 above you can buy, or 25,264 below you can sell. If you are buying here, you must hedge it with one 25,500 put option. If you are selling here, you must hedge it with one 25,300 call option. Not only that, you can also sell some options. Instead of buying a put option at 25,500, you can think of selling some 26,000 call option also, because last target is 26,000. If you are selling on 26,000 call option also, that will also take care of your hedging requirement. It is not mandatory that you must buy some options. With the future, you can sell a call option. With the future sell, you can sell a put option also. So many different ways you can able to hedge it. So this is what we are expecting for the coming week in the Nifty and Bank Nifty. Do follow this report, and if you have any query, you can just post your queries to this particular email ID. Do share this report with your friends. Just download it and share. And if you think that yes, 1ST is a good method for trend forecast, procure this software which will cost you 5,000 plus 18% tax, 5,900. You can own this software. So this is very important how we understand the trading business. Many traders, what they do, first they used to lose the money. Then they used to think that, okay, let me buy some software, let me learn something. First, all your money will be deployed, or all your money will be lost in unintelligent trades without following any method. And post which, if we are just going for any such kind of learning and all, it is of no use. So if you think that yes, this is not the correct approach of the trading, then do accept some valid methods or concepts. So whenever I talk about valid concepts, it must be very clear. The concept by using which you can do some future forecast, the calculations you should do. So you should derive some supports and resistance calculations, and market must accept that calculation. So this calculation we are doing on 23rd, and it will be valid from 26th to 2nd March. So let us validate whether these calculations comes true or not. Experience it. After experiencing this thing, if you are thinking that okay, let me accept this concept for my trend analysis, then you should accept it. Yes, many of you have not experienced the all 109 weeks of success. But if you experience 1 or 2 weeks of this, that also enough. So this is what our software look like, one standard deviation software. It has a stock scanner to give you various stocks which is in the uptrend, downtrend, stocks given gap up, gap down, which is between the buy and sell entry prices they have opened up in a day. It has a scanner. It has an option scanner which gives you whatever the options we are analyzing, which are the best strike options to buy for weekly trade, or which are the best strike options to sell for weekly trade. So it has various combinations and filtering options by means of which you can able to use this tool. So besides that, it has the features to do intraday and positional trade in equity, stock future, index future, commodity, as well as your options. So this is how the software look like, and you get a complete user manual for that, and you get an Android edition of this particular software also. Along with this desktop edition, you also get some Android edition of this particular software. So not only this particular simple trading mechanism, you must follow some of the option strategies whatever we are flagging in our YouTube. Recently, we have given two different strategies for option trading. So one is Bank Nifty option strategy for the coming 10 days. Another is the Sun Pharma option strategy, 1 day back. Do evaluate these strategies. These strategies are being given how much margin it has taken, what is the impact it has come. Even though if you are not trading, do a paper trade and experience these particular strategies. This will help you a lot in long run. So you must have an objective trading. So whenever You trade, you have an objective. Yes, I am trading, I have an objective. This is the maximum loss if it happens. This is the maximum profit I can gain. So you should have a planned trade. So this is the couple of option strategy. If you can experience, you can be in a position to know about this. And subscribe to this channel. Once we are uploading any video, you will be informed by the YouTube. So subscribe to this channel, share these videos with your friends so that they should take the benefit of this particular method also. And we have various courses and softwares, as I have shown you, one standard edition software. Various courses and softwares we have. So if you have decided to buy any of these courses or software, please do call to our sales number. If you want to buy the entire stuff separately, if you are buying it, it will be costing you 29,000. And if you are deciding to buy at a stretch, it will cost you 17,500. Do call to our sales number. We will assist you to choose the right product for you. Keep following this report and give your feedback weekend by this coming weekend, or I will also explain how it has performed in the coming week trend analysis. Thank you. Keep following this report.